Hey, what's up everyone? Welcome into the channel. My name is Brett with Investing on the Go. Today we're continuing our series of living from our portfolio using Robinhood week 19 update. We're going to go ahead and cover some leverage buys in today's video. So we have 6 different areas to hit. We'll go fairly quickly through them, but if you want to jump to a specific section, check out the timestamps down below in the description area. With that said, if you guys are brand new here to the channel, I would really appreciate it if you give this video a big ol' thumbs up, subscribe, and check out the pinned comment down below to join the Discord server. It's completely free. And with that said, let's go ahead and jump into number 1, our market update. So jumping and heading over to the market update, I did want to go ahead and point out some specific things. Like earlier this week, we had the campaign officially being marked over. So the campaign is officially marked as over by President Trump. Now, there's a new campaign being put forward that will apply short pressure burst if a deal is not made here shortly. And then out throughout the week, hey, there's a deal potentially coming, very possible within the next few days. Although there was fire exchange between Iran and the US. Iran launched some drones, some missiles, some boats. In response, US destroyed those objects, and the ceasefire remains in place, right? There's still conflict going on between Iran and the United States, between Israel and Lebanon, but the ceasefire is still in effect. So it's kind of an gray area right there. Gas has continued to climb throughout the week. The average went from 446, 454, 460. I know prices here where I'm located at, I've seen prices up over $5 somewhere, or charging upwards of $5.50 per gallon. So it is very insane to see just how much gas prices have climbed from just February, where they're around $3.18 back in February, to where we're at now, where the average is 460. I'm sure your guys's are, either around 460, a little bit below 460, or even over $5. Let me know down in the comment section below, what are your guys's average gas prices in your location? So that is it in terms of kind of the highlights there. If we jump and take a look at the SPY, as of Friday, we did hit all-time highs here on Friday, closing near under 0.10% of an all-time high on the SPY, just up and away. I keep waiting for a breath to hit. Investors in the chats are looking for that breath to take back, where the market will pull back. If we take a look at the last few months since back in March, the market has essentially gone nowhere else but vertical. So there has been some little areas through here we kind of wiggled through. I set my lines up, but we never broke below. We just continued ramping up, moving up due to memory, semiconductors, and so on. Data centers, AI, really pushing that forward. And then we have the NASDAQ breaking and staying above, closing at, once again, all-time highs. All-time high here on Friday, closed and continued moving higher even after hours. Are you guys buying any individual stocks out there, or are you just sticking with the ETFs that track the market? Let me know down in the comment section below there. Okay, so that's essentially it in terms of the market update. I don't really have a huge amount of highlights there for that area, so we'll jump into number 2, our week 19 income update. This was our biggest T-SPY payout. Although we haven't purchased many shares in quite a while, this week we were paid out our heftiest amount. So let's jump into the income tab. And boom, dividend from TAP Alpha S&P 500 Growth and Daily Income ETF. This is ticker symbol TSPY. It paid us a whopping $1,201.88. This is based off our shares of 4,100.5731. I really want to get rid and sell this tax lot with those fractional shares. I didn't mean to buy the fractional shares when I purchased it, and it just kind of irks me. I don't like seeing fractional shares in there unless, I really don't. And we can see here, they paid out 0.2931 per share, and that made our total amount there of $1,201.88. And yes, we will be using this, as we have in the past, to live from our brokerage. Now, we are completely living from our Robinhood portfolio with no 8 to 5, and we're generating income within our portfolio by investing into these covered call ETFs. I do have other miscellaneous income, such as now from my YouTube channel here, my other YouTube channel, affiliates, referrals, and then I also have my real estate business on the side that kind of funnels capital over this way. It all funnels into my brokerage account. That's my core hub now here on Robinhood. I have my daily expenses, my bills, that's all going onto my credit card, my Robinhood Gold 3% cashback card. At the very end of the month, I pay down my credit card bill down to zero. I get that 3% cashback. It goes into my brokerage account. I pay down my mortgage. I pay down my car loan payment. And then anytime I have excess, which is often, I usually have excess capital remaining after paying down everything to zero that needs to be. And then I reinvest into appreciating ETFs that have a high yield, no NAV erosion, offer growth and future income. And it just continues to build up my future income. And the next payout, right, where I'm able to have more capital to redistribute into paying down my expenses and also buying back more shares. So it works out really well. And that is our income for this first week here of May. Now I'll go into the history payouts of T-SPY here very shortly. As we dive into our dividend portfolio, I'll have a little area there where I keep track of all the dividend payouts and how this is the largest payout. But that we'll jump into that here in just a moment. Now, let's go ahead and get into number 3, our week 19 buys and sells. So let's jump into our buys and sells. So last week, our video, we came out and said, hey, we're completely liquidating out of Microsoft. Microsoft did have a bit of a pullback, but not as much of a pullback that was in Meta. So last week on Friday, I liquidated out of my holdings right around 414.14. in both my IRA, Roth IRA. It did have a bit of a pop-up here during Thursday, during the market hours on Thursday, and then quickly fell back down, essentially hitting where I had purchased or sold off last week. If we take a look here at our stock journal, we can see that our sell last week, as of current price and where we sold last week at 414.13 and 414.16, the stock has appreciated 0.22%. And we can see that as of this week, we did end up buying into Meta. So within my Roth IRA, I purchased at 607, and I set the exact same buy to do in the morning hours at 6:30. But for whatever reason, I may have hit the 24-hour time frame. It picked up at $611.66. It picked up at 2:01 a.m. So I went back through, make sure my settings are set up to buy open, pre-market open versus in the middle of the night. For whatever reason, I picked up at 6:11. But as we can see via the stock journal, the purchasing those here at 6:07 gained me 0.31 versus me picking them up at 6:11, I'm down 0.33. So all in all, it kind of balanced itself out there a bit. And Meta has a lot more upside potential versus Microsoft. It has bounced back. It's having a really hard time recovering past this phase. Whereas Meta, it had a huge move to the downside after earnings, dropping from around 674 all the way down, bounced at 599, and has been within this little range through here. I'm happy buying Meta in this, $595 to $610 range, even 611 where I purchased. As I continue to buy and hold into the Meta, I previously bought Meta at the $610 point and wrote it down, and then I liquidated when it had hit $711 back quite a while ago. So I'm happy being back into this position long term, as it kind of aligns with some of my other longer term goals. So that's kind of the interesting buy right there. I did have those leverage buys. So as we now discuss the leverage buys, I am tinkering with those. I'm not going to be going heavy into these leverage funds as of now. So we started off earlier this week trying to buy XSPY. Here I made a mistake. For whatever reason, I was thinking in my head, I typed in SPYI. It's probably just because my fingers kind of recognized that versus XSPY, and I put in 5 shares. I noticed right away that I had picked up 5 shares of SPYI and said, whoops, I have to make sure that doesn't happen in the future. So I also picked up ticker symbol XQQI, which is the NEOS boosted NASDAQ fund. We picked up 5 shares at 51.43. And then I went ahead and picked up the one that I did want to buy, which is the NEOS boosted S&P 500 high income ETF, which is ticker symbol XSPI. And then I sold out of the SPYI at essentially the same price. So you can see here, I set my limit back at the price that I had purchased it prior. That way I'm not losing any capital during the trade. It just 0 for 0, and then I'll come out flat there. So we did do some buys of the ticker symbol XQQI. You can see our purchase right there on the 7th. We picked it up at $51.43. We're up 1.10% on that. Even though we just bought it on Thursday, the market has been exceptional and just quickly moving to the upside with no breath in sight. And we can see here the X SPY is essentially flat. It hasn't done anything. You can see here, I picked up SPY in accident. I liquidated out of it at the same time. I made 2 cents on that transaction. I'm going to call that basically flat on that move. So that is our buys and sells. Really nothing else really popped. I'm testing the waters with, is it worth it to invest into XSPY or into XQQQI? Or should I just stick with my normal funds here of TSPY and TDAC? So that's kind of what I'm doing. I like to monitor these using TradingView, but it's one thing to just kind of monitor them on TradingView, and then it's another thing to own them and monitor them within your portfolio of how they perform. That way you could just flip open your portfolio and kind of see what they're doing differently throughout the day versus trying to load TradingView somewhere when you're on the go on your phone. It just doesn't work the same way. So that is our buys and sells. Number 4, our dividend portfolio and income breakdown. So popping over to our dividend portfolio, it has continued to get larger, as you can see through here. We've added 2 new positions into our portfolio. We added the XSPY and we added the XQQI. We have those 5 shares right on through there. Okay, so as we move on down through here, I didn't add that SPY position because it was a temporary purchase within the portfolio. I didn't add it in here as a long-term position. I bought it, accident, I sold it. I didn't add it in here in my journal. Well, I added it to my journal, but not into my dividend portfolio. So our first one earlier this week on the 7th, we picked up XQQQI. We had 0 shares. We increased it by 5 shares. That increased our new income by $4.10 on a monthly difference. On a yearly difference, you can see here that increased it by $49.20. So I invested roughly $500 into this. No, $250. Right? I put in a little under $250 into XSPY, and I put in a little over $250 into XQQQI. And roughly $500 was invested between these two. And we can see here, XSPY, same thing. I had 0 shares. We picked up 5 shares. Our past income was 0. We increased our future income by $3.35 on a monthly basis. You can see here, it brought up our old monthly income, essentially $4,413 was with our base at the start of the week. With our XQQI and our XSPI, we increased our monthly income by roughly $7. Or with those 2 purchases going forward, we increase our yearly income by $89.40 as of now. Now, I'm not buying heavy into these leverage funds. They cost more in expense ratio. I want to see, is the performance from these boosted funds better than my TSPY and my TDAC position? As of the research that I had done prior, I actually end up having a better performance with just holding onto TSPY and to TDAC. If we take a look at TSPY on the day, it is up 0.71%. Yes, XSPY outperformed it today by points, it's at 0.77. So outperformed it by 0.6%. But that higher expense ratio of 0.3, right, 3 basis points there, it can be a little bit more expensive there to hold throughout the year. We shall see. On the Tap Alpha QQQ side, TDAC, on the other hand, is up 2.21% today, whereas XQQQI is up 2.01, right? So 2.21 versus 2.01. The Tap Alpha's NASDAQ equivalent fund outperformed the XQQQI, and it has a 3-point difference in expense ratio. So that's kind of where I'm comparing these funds. I'm going to start small and just kind of add little by little. They do have a higher distribution, so by adding equity into these positions, I may not have the performance from TDAC and TSPY, but these will have higher distributions. So we'll have to see how these will hold up with the distributions being as high as they are. Will they begin to have some NAV erosion, or would it be best just for me to just stick with my normal TSPY and TDAC positions and continue to dollar cost average into them during the dips? As we take a look at our positions up here, we can see that TDAC is up 7.03 in the portfolio just on price alone. No dividends reinvested, or we're not taking dividends and total return into consideration. TSPY is down on paper 0.74%, although we've received almost $5,000 of capital distributed to us to use, a little over $4,100 with TDAC, 37 with IWMI, and so on. So kind of chatting about now the TSPY position. Every time that TSPY pays out, I add it in here. So here is our May distribution. It is our highest distribution for TSPY that we've ever received. We haven't purchased TSPY in a while. As we look back through our journaling through here, we haven't picked up any TSPY since back in March. That was the last time that I purchased any TSPY. I picked up 21 shares of TSPY back on the 27th of March, and I haven't touched it since then. So it's been April, then it's been May, right? So our April payout was $1,150.91 with the exact same amount of shares that we own right now. So from last month, where we had the exact same amount of shares, versus this month, we made an additional $51 of distributions with no changes to the share count itself. Prior to that, back in March, it was 1,196, and then February was 1,172. So this is our TSPY position. I'm not adding to this one just yet. I'm trying to move TDAC up to 4,100 shares, and then I'll continue to balance these positions out. Right now, you can see here, it makes sense to invest into TSPY a bit to just kind of lower my cost basis, versus if I buy into TDAC right now, I'm paying a 7% premium over where I purchased it. I would also like to maybe add into my BTCI position, but I like just seeing that I have 300 shares, so I may target the gold and high income ETF. Or what I could do here is take the NEOS gold high income ETF and roll it into BTCI. That would essentially nullify nearly half of the loss here, just kind of dollar cost average it down. The cost basis down to, instead of being 51.43 as the cost basis, it could bring it down to closer to 44 and some change right around there, just by taking the capital from the gold high income ETF and rolling it into the BTCI. What do you guys think of that? Do you think it would be a good idea, bad idea? Let me know down in the comment section below. Okay, and into number 5 now, our Robinhood live portfolio breakdown. So let's jump over into Robinhood. We'll take a look at the Robinhood platform itself. So I try and keep everything as it is within my spreadsheet. So all of our stocks are going to be very similar. All of our positions, obviously our shares and such, are cash earning interest. As you can see here, if we roll over to our dividend portfolio, this matches 73.69 to 73.69. So I like to kind of have, whether I want to look at my Robinhood platform or whether I'm just, want to look at the spreadsheet directly, I can kind of see what's kind of going on and make the decision from there. Now, we just had $1,200 deposited from TSPY paying into our account. Now, if we took that $1,200 that's set for this month's expenses, that means that we have roughly $5,000 of capital from the past that we want to invest into the market. Now, myself, I would like to slowly invest that capital into the market at a slow pace, just due to the market having moved so fast and vertical these last few days, these weeks, this past month, that I'm expecting a bit of a breath and pullback. But at the same time, if we take a look at our journal, not too long ago on the 21st of April, which was just a few weeks ago, and also here recently as of last week on the 28th of April, which was just last Tuesday, I purchased TDAC. From that position that I picked up on TDAC, I'm up 7.31%. So I could sit here on the sidelines and say, you know what, I'm waiting for that pullback to take place. And then when that pullback does eventually take place, whether it's a 5% pullback, a 10% pullback, these purchases right through here, where I could have picked up TDAC and been already up 7.31% on my $5,000 that I was waiting to invest. It's a cost of opportunity. So I kind of have to make the decision, do I want to keep that $5,000 on the side and wait a bit for opportunity, and potentially, hey, the opportunity came, but the market's already moved up 10, 15, 20%. Or if I were to lump sum invest it, say into TDAC, for example, if I were to bring this share count up to 4,100, the income on a monthly basis go from 4302 to 4348. So it would only be a slight increase by adding that additional capital into there. Let's see, how much would that be? 41 minus 3968 is 132 shares at the current price of $28.15. That would only be $3,715 invested. So I wouldn't even need to invest the full $5,000 to just bring that threshold up to 4,100 shares. And then I could keep the other cash just as dry powder because the portfolio is comfortable doing what it's doing. But at the same time, I may not need the excess capital, because the more capital that I invest right now, the more dividends and distributions I receive the next month. And then it's just a cycle where I work on my budget to not spend excessively, and I have excess capital remaining over where I could invest and bring next month's up even higher. So it's a very interesting process. So I just kind of have to make the decision and buy. So maybe I will buy all lump sum. We'll see how this week plays out. I just keep waiting that as soon as I do make that purchase, the market's going to fall 5, 10, 15% because of where the market has moved here recently and all the geopolitical issues still going on, the price of energy, infrastructure, and all of that. But sometimes we just have to ignore that and just FOMO, right? So let me know down in the comment section below. Would you guys lump sum it all into the market right now or continue to dollar cost average? I'm still dollar cost averaging slowly, about $500 a week with the cash that we have sit in the account. And if the market, I guess, does pull back potentially, and we get an opportunity to buy a little bit cheaper, then I will have a larger chunk to invest and bring it in. So let's go ahead and jump into our last area here, our big wins and plans update. So in terms of wins, hey, we got monetized in early May. So as of May 1st, I made my video saying, hey, we officially got recognized over on YouTube that we are monetized. We can see here on the month of May now, we're on May 8th, we're up $14.41. So this is an income source that I did not have previously back in January, February, March, April, right? So as of May going forward, we're going to continue to have a revenue buildup. This is going to add into our miscellaneous income as I continue to create videos, and I'm going to try and continue to push more content out, as this will help bump up even more income going forward. So if you guys have any specific areas and topics that you would like to have discussed here on the channel, let me know down in the comment section below for sure. Other things that I'm currently working on and other wins here. The SoFi had a bump up. So recently my API dropped down to 1%. Had to reach out to their support. So I have direct deposits going from my real estate business. My property manager sends it into my checking account, and they recognize that as a direct deposit. And for whatever reason, it wasn't characterized correctly. So I talked with the support. They got me all set up, and we can see here that SoFi, with the cash that we have just sitting in cash over at SoFi, it's generating a 4.5% up to your first $20,000 of cash. Anything over $20,000 is at a 3.3% APY, but a 4.5% for cash that you have to have in reserves anyway is, I'm going to say, a big win right there. Other areas that I'm working on is Facebook growth and Instagram growth. I'm really trying to monetize my Facebook platform, and that comes from my Instagram. So here on Instagram, I'm pushing content, reels, and posts every single day to get those views. It posts over on Instagram and then it automatically shares over to Facebook and Threads. And we hit over 1 million views back in April. We're trying to continue that growth into May and hoping that within the next 2-month, 3-month period, we could potentially get monetized on Facebook and then start to have some ads over that way. So if I do have any shorts, I can kick them over to my Instagram or over to Facebook and they can generate some revenue that way as well, which will kind of feed back into our portfolio by reinvesting that miscellaneous income, growing our dividend portfolio going forward. So that's kind of the area right there. I don't believe I have any other big wins to kind of share at the moment. We do have some plans still in the background kind of brewing. I kind of tinkered here a bit with the Robinhood. I opened up another cash account. So the Robinhood, because you're a gold member, I get a 3.75% APY. I was tinkering with the idea that if my SoFi platform didn't work out for me and they say, hey, you know what, we're not going to be bumping you up to that 4.5% APY, you're going to stay at that 1%, then I was going to just move the capital and everything over to the Robinhood portfolio. And that second account would act as a cash account, but it still works out because eventually I'm going to move this account. It is a margin account right now, but I'm not taking advantage of any margin. So I have to transfer a few things in the future to direct withdraw out of my cash account, such as my mortgage, my car payment, a few other direct withdrawals. And then I'll move the cash that's specifically needed for my mortgage, my fixed expenses that are direct withdrawals from that account. And then I'll have a specific amount there for that purpose. And then I'll have this account moved into margin, because you can't charge like a mortgage, you can't pay off your credit card bills, you can't pay off specific things when your account is in margin. It needs to be in cash. So I'm going to be moving cash from this account from the margin account to the cash account. It'll be direct withdrawn to pay down my mortgage, my car, etc. And then I'll have excess capital from the margin being used to invest into these covered call funds. It's not something I'm moving to do as soon as possible, just because, hey, I end up using, $50,000 of margin today into, say, T-SPY, TDAC, and the market does pull back. It's not going to be a really good start. So we'll see. We'll see how we end up using that margin. I do want to eventually get to it, just because that was one of the big things that I moved to Robinhood for. They have much lower margin costs than the other platforms that I've used in the past. So it just makes sense to take advantage of that option. So guys, that is going to be it for today's video. That was everything that we wanted to cover in today's video. I know it was a really long video, but I'm hoping that I try to provide as much information as I could on a weekly basis. And that is going to be it for this video. If you guys please go down below, smash that thumbs up, smash that subscribe. Let me know down in the comment section below if you guys stayed to the end. Drop any sort of comment, just say hello, or let me know what you guys are invested into the market this week, this month. And that is it for me. I will catch you guys in the next one. Bye-bye.